The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here. This is the Tiger Technicians Hour, and we're looking at the Dow up. Let me just go there right now. I just move away from the futures. Okay, that's good. Okay, so here we go. The Dow at this particular point, after being very negative, is trying to come back. It's still down 157. So I'll go through these and then I'll talk about the technicals. The S&P at this particular moment has come back a little bit. Let me just get that right there. There it is. It's down 15 at 58.38. If you look at the QQQ, also under the most recent high at 495.13, down 35 cents, come back very nicely. Let's go to the SMHs. It's very important. The semiconductors down $1.48 to 251.36. Let's go to NVIDIA. Yes, I agree. NVIDIA's PE is out of sight. But you know what? As a leading semiconductor in the right field at the right time, you can't fight that. It's at an all-time high as we speak. 144.10, up 37 cents. Let's go to bonds. James bonds. 118 and 22 30 seconds, unchanged. Finally, you're getting a little bit of stability in the bonds themselves, so that yields can stop rallying. We'll see if that happens. I want to go to high-grade copper. High-grade copper is trading up 2 cents at 4.38. It's just kind of stuck in this range, not doing very much, usually together with the bonds, because it's so high-grade copper, because it's an international economic really barometer of sorts. I look at wood, which is the iShares Global Timber and Forestry ETF, and it's down 10 cents at 80.865. Close to the 200-period exponential moving average. Yeah, struggling. Okay, so let me do this. I wanted to just quickly go to the VIX index, because one of the aspects that we've got to consider is that you can see from this chart, look at the weekly chart, you see that 9-period moving average green over the 14, and that's been going on for, it hasn't gone pink in ages since it crossed positive back on the week of the 18th of July. It was down in the 1275 and 17.19 range. It hasn't turned pink. And that just tells me that over this particular time, you've had fund managers who are buying some insurance. Buying some insurance is one thing. Buying a trend is another. And as I see it, the trend, certainly in the general market, has been to the upside. But most importantly, the volatility index has been rising and making higher highs and higher lows mostly. So I cannot ignore that it's trying to tell us that at some point we're going to get a sudden surprise. But that's not the point. The point is, what do you look for? And what I would be looking for is I'd be looking for the VIX index, the volatility index, trading right now at 19.06, up 69 cents. I'd be looking for it to be trading on a closing basis above 24, 24.25, somewhere in that range. If it does that and holds there through the close, and it actually starts to hold in the 22 or higher area for a couple of days, I think you will start to see selling pervasive as it goes through each sector. At this particular point, I have to treat it just as a kind of insurance policy, a measure of fear. And that's all we're going to do. So with that said, a couple of things I want to look at right now is, now it can take a little time. The Dow trading right now down 179. It's really struggling to get some traction to the upside. And so I need to show this. Let me just take a moment to put it across there. Let me look for it right here. There it is. Take that away. Okay. In the Chapman wave methodology, there's really a very simple technical way of looking at it. We try to identify the lowest low bar. Actually, that's got two Chapman wave notations. Let's stick with just one right there. There we are. We try to identify the lowest low bar and then count each successively higher peak. If you go to a peak A and then you pull back and you start to go to a leg B, from that moment on, you start to think, is it possible that there's a buy signal that's going to be upgraded to a buy mode? The moment you mention buy mode, because the technicals of strength, it implies that there should be at least a minimum of 4 higher peaks. How's it notated? Alphabetically, in sequence, peak A, next peak by 1 penny, going above peak A, starts leg B, pulls back, makes a peak B, 1 penny above B, starts C, etc., until you get to D. D is the 4th highest peak. That's where other things can happen. What do I mean by that? At D, you can get your sharpest pullback. You can recycle within 3 bars to an instant restart, where it says now you've got an overlapping wave. You can even go to another 4 higher peaks. It's an incredible tool, but it has to be moderated. You have to be notating and looking at the technicals at the same time. So where are we here? And the objective is that the buy mode suggests at least a D, 4 higher peaks. Well, we got to a C. There's no other way I can count it. Look, there's a D. I could call this Chapman wave unconventional flat-based restart. I don't want to get into fancy. This is just simple. You can't continue the alphabet, and that just says somehow or other we should make, possibly over the next few days, we'll see if that's going to happen, we should make some kind of a cup formation or a V-shaped formation and try to get to a slightly higher high above 43,325. And ironically enough, it goes to 43,325.09 was the high. If it goes to 0.10, that starts leg D. Or it could even do this. It could have, as you had in the S&P twice, very successfully, you had a peak C1, C2, meaning just it fractionally made a little trough, but it didn't make a new higher high, but it got almost there. And I call that almost, it's called a phantom peak, D, and I call it C1, C2. And that means you get a pullback, and then you can start a brand new buy mode. Well, we've done that, but we did get to a D in the S&P. And that just says, okay, that's fine. From here, you've got to be a yellow light flashes. Well, we haven't got the yellow light flashing yet in the Dow, because it's pulled back from the 43,325 to today's low, which is down at, I said today's low, and then I didn't have it already. Let me just move this over so that I can make this legible. There we are. Come on. Yeah, so that means that if the Dow is pulled back, that's a pretty sharp pullback from, this is a pullback in the daily chart that went from 43,325.09 to today's level of 42,730.36. I think that's a pullback. So now I'm expecting that somehow or other over the next week, it could take longer, but there's going to be a rally that attempts at least to get to that leg B. All right? But the weekly chart could have recycled this and restart in within 2 bars. It's within 2 bars of a new high. So this could be E/.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Folks, we're back, and we're looking at talking about the Dow, saying that there should be some kind of upside pop. It doesn't have to be all the way to the 43,325 level. But let me just show you a couple of things that I think are quite important. We're starting to see some round numbers. Those round numbers are kind of significant because if it's in particular sectors, I haven't seen round numbers yet in the sector that's really most important, and that's in the Dow. But let's just see. I had a message to say GE is popping today. Let's just go to GE right now. GE right there. GE. Wait, why is it not working? Okay, there it is. Okay, so what is GE doing? It is, dropping, not popping, but dropping. Okay, so GE went to a peak C. Now here I was looking at this closely the other day, and I thought, all right, that went to a peak C at all-time high of 194.80, and I'm going to follow it for the next couple of days, I said, to see exactly what goes on, if it's going to make this double top. And it went to 194.39. So 39 below 80. It's a little pushing it, but I'm going to call it right now the potential for a peak C1, peak C2, and that acts like a top. And we're going to see what happens next. And it's really important that GE, I consider GE to be, and it's in the weekly chart. There's an alternate count. I didn't want to use it because everything was acting so well, and it still is in the weekly chart. And I've got it as a leg C, and the monthly chart is a G/C. This is really important because G is now called General Electric Aircraft, I believe. This is very important because I have it with Cintas. I have my stocks as a core indicator. Cintas, which is uniforms rentals, just starting a bit of a pullback. It too has made this alternate count C. All I can say is that everything about these charts is suggesting they've got a pullback here, but there could be one like a rogue wave to the upside or a right arm extension that just suddenly takes it to these higher highs. It's trading right now 210. Cintas made an all-time high 4 sessions ago at 200. Look at this. right here, 215, I think, in 15 something, 1537. And I was looking for round numbers. It doesn't often give me round numbers over the years, I should say decades. So this I'm watching very closely. The other thing I'm looking at here is you've got Uri, which is there are rentals, and also there's no other way I can count this. A leg C made a peak C to the upside in the daily chart, and a peak C in the weekly chart. Oh, this. When I go through these, it just gives me, I'm not sure whether I should call it the confidence, but it tells me we aren't yet ready for that top because there's still enough residual strength to try to get to those extra peaks that we're looking at, least one peak to the D, in enough of these stocks to say, okay, just keep focused on what's happening at the moment. And at the moment, what we've got, let's go to the futures because it gives you the overnight trading. And I did have a Chapman wave notation yesterday in my arms. I call it the Chapman wave trend gauge reading, which is very low, which said we should have a weak Dow. And it's exactly early in the morning before a rally attempt, and we've kind of had that. So what is this in the YM? So is this an alternate count? G says no A, so this has to be, yeah, this is a C as well. I can't believe it. In the futures, you've got daily futures, you've got peak A, look, there it is, peak B, peak C. So that was a peak F right there, pullback. And now you've got a C and a pretty sharp pullback, I must say. Can't deny that. All right, so with that said, I'm going to go to a couple of things. We were looking at Bitcoin yesterday and the day before, session before, and I said Bitcoin for the first time is starting to show some signs that it has, I can't call it residual strength because it's strength that's just been building up in the weekly chart where it went to a peak A, peak B, peak C, and it tried to get above the inside track repellent zone. So I'm watching Bitcoin very closely because it fits into this category of other. And the other is that gold is making all-time highs. If you're looking at the dollar recovery highs, even as we speak, if you look at the other currencies, the EUR, USD, and I'll get back to a reason why I'm talking about them, making lower lows and lower highs. If you look at the USD JPY, which is the yen, which often tracks with the Dow, making a new recovery high over the 200-period moving average. Very unusual to have dollar going in the same time. Usually over a period of a year, you'll get maybe 2 weeks, 3 weeks with the dollar and the gold go together in the same direction, but mostly they're in opposite directions. Here they are going together. So this is something to note. And what I was saying about the other areas is that I'll go to this. I know you'll think it's a little obtuse, but I'm going to Robinhood. Robinhood markets, this is a broker trading at 27 right now, 26.98. At a peak D in the daily chart, a leg C in the weekly chart. This to me gives me a sense of what the general public, a certain sector of the general public is doing. And you can see they are buying. They've taken Robinhood from the single digits for a couple of years, now up at the 20, 25, 26, 20, almost 27 area. And that's really important because look at the weekly chart. The weekly chart's it's in a leg C after that peak G sharp pullback. And my contention is, and I have no real way of proving it, is that there are a lot of traders in the gold, and they were in the Bitcoin, then they went back into gold, and they keep fluctuating. But now I think they're mixing the two. They're in both. And that just says to me, I've got to monitor it because if the Bitcoin trading at 67,250 down 540 today starts to trade anywhere in the 71,800, I'd put 72,300 area, I think you're going to see an even bigger move in Bitcoin. It'll become very attractive again. It was a major leader of a sector, going into the March high and the February, March. And then I said, I think I'm going to be looking at lower highs and much lower lows for that falling axe formation. And then we'll have to wait and see how the inside track repellent zone is treated if it becomes a propellant zone. And that's where we're going to be. So as I'm looking at it right now, the monthly chart has this cup formation. Yes, there was a handle and cup, and now there's a cup and handle. I don't want to go into that right now. Maybe Technical Friday, if someone reminds me, I'll do it. But right now, I think this handle pattern says that if there's a close in the high 71,000s on a monthly basis, I'd even say on a weekly basis, probably I should say 72,000s just to be safe. Then you're looking at this being the fulcrum right here, and that's where you were seeing lower highs and lower lows. And now you're going to start to see higher highs and probably higher lows, if that's the case, if it does get to the 72,000s. All right, questions come in.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
folks, let's see. Triple M came out with earnings today. Let's see where they are. They're actually down to 61. Whoa, they went all the way to a new recovery high. They went to 141.34 and trading now at 132.22. Hit 130 on the down move. What was the low? 130.96. That's interesting. So, yeah, I went to a leg F in the weekly chart, a leg C in the monthly chart. That's quite a pullback. I'm now looking at this and I'm saying, this is the phase that I said this particular week. I said is the week that we're going to get tests all over the show as to the residual. In this case, it would be residual strength because it was initial strength or weakness coming up. And I have to monitor I say to subscribers, we're not adding anything. There could be a bounce, but we have to wait to see if that can occur. That's all we can do. We've got our stops in place for the things that have worked out very well. I don't want to take any risk. I don't think it's worth it right at this particular moment. And yes, a very good example, Triple M. It goes from the 70s back in 2023, and it's just gone peak A, peak B, leg C. It's still a leg C in the monthly chart. The technicals are still very strong, stochastic at 95%. This is all very good action. So we'll have to see how the end of October, beginning of November really pans out for many of these. So that's Triple M. Let's look at Apple. Apple made an all-time high. Let me just get there about a week ago. It spiked up into the high 230s. And now what we're looking at is trading at 233. So what did it do? It went to peak E. And this is the pattern that we've been talking about for a while. It's a stalk leg formation in Apple. It's a little convoluted, but it's kind of done what it's supposed to. It went to that neck, and now the beak is a very jagged. So it went all the way to 237.49 on the 15th. Pulls back the next day, makes a little island reversal, pulls that in, pops up, and then walks the 9-period moving average, which is over the 14. That's good at 233.85. Leg C, I needed to check this out because, look, the all-time high before was 237.23. I may as well just type that in. 237.23. And what did I say it was just the other day? I said 237.49. Oh, I love this. 237.49. And that's what we've been seeing a lot lately, within pennies coming back after a dip to make a kind of a double top within pennies of the previous high. So I'm watching Apple very closely. At this particular point, I have no reason why I shouldn't call this an E/C. Remember my rule of thumb with the rectangle that creates a lopsided cup formation, that it can go just under, right on, or just above the previous high. And then if there's a pullback below the halfway marker of the actual rectangle, that would be at 218. You've got to be very careful. We're at 233, very nicely above it. So this is a work in progress, saying a little double top action here that you've got to monitor, but it is a leg D in the monthly chart. Let's go to Amazon. Amazon right now is trading up a little bit, up $1.12 at 190.20 something. Peak A, peak B. MACD is just turned positive. The relative strength index is good. Stochastic's good at 80%. I'd prefer if it was higher. And the on-balance volume is rallying. It's not overbought. 9 is over the 14. Yeah, this is just saying within the same kind of pattern, rectangle pattern, probably a narrower rectangle pattern. I'll just draw it in like this for the moment. It's still looking very good, but it's stalling out. It's struggling at this particular point to make higher highs, but struggling doesn't mean to say that it's failing. Let's look at Microsoft. Microsoft is trading up 10 at 429.10. Oh, this is a nice break to the upside. What a mixed market this is. When this is like gold and silver, where gold would rally and silver would look around and say, ho hum, oh, I better catch up. Then silver catches up, and then gold takes a breather, and then they both come down together. This is the same thing. Here we've got the tech sector that was moving very nicely to the upside, and Microsoft was just stuck, absolutely stuck. And here it is with a very nice move up, 2.46% at 429.11. The weekly chart still says, yeah, you're still stuck. But this is a nice break to the upside. I should mention that we are long from 338. I'm not doing anything right now with Microsoft, waiting to see what happens next. CRM, Salesforce.com, made it a peak D the other day, stalling just a little bit at this recovery high. All-time high was up in the 311 area back in November of 2021. Cascades down to 126 in 2022, October, and then it rallies very nicely to a new all-time high at the 318 area, and pulls back very sharply to 218, and now it's trading at 289, acting very nicely, leg C in the weekly chart. Okay, so I've got a couple of things that we want to look at. GDX was a question. Yeah, GDX is trading at a new recovery high. Now, isn't this fascinating? Leg D in the weekly, leg D in the monthly. And look at this. Oh, what did I do? Oh, did I do something wrong? Yes, I did. Okay, let's go there. So look at this. This is the gold all the way to 66.98 was a high in 2011. Comes all the way down to the 12s in 2016, 15, 16. Makes a deep cup formation, screams up to 45, pulls back again to the 21 area, and now it is doubled at 43.77 leg D, but it is trying at 43.98 as a high today. 45.78 was the high in August of 2020. Cup formation. Oh, I should show you this a little bit in greater detail. Let me just do this. So what we've got here is, all right, stretch that out a little bit. See this huge cup formation, and with another cup formation within it, and that's what I meant about the Bitcoin. You see from this marker right here, just let's take it from there. That was lower highs and much lower lows, and now you're starting to see higher highs and higher lows, and in this case you can even say much higher highs. It's in leg D, and it means that the right, this is called the quarter, this little half semicircle, and now you've got the right side of the hull of a boat. Now you're on the right quarter, and this is breaking to the upside. So there's a whole tide change to the upside of the monthly. I'll be back.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information in one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom Daly as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom Daly as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
So let's look at the FXI, which is FXI right now is trading at 32.26, up 52 cents. It made that peak D doji candle high that was just in 37s about 3 weeks ago, then pulled back quite sharply. Now it's at 32.26. It's a peak D in the weekly chart and a leg B in the monthly. This is hard to say struggle. And I think that I mentioned this before as we were going to that leg D. I thought that many of the Chinese stocks, Baba's included, that's Alibaba on that around early October, made that peak F back in the 117-ish area, and then dropped sharp, gap down, and then made a dreaded H and pulled back. Leg D is a peak D in the weekly chart. Let's look at XPEV. That is this is the China Xingpeng Inc. designs, develops, manufactures smart EVs. Made a peak F for the same thing, going into that high late September, early October. The exact date was October the 2nd in the 13s. Now trading in 1142 area. Nice move up today, but it is still taking a breather after a very big move to the upside. So I'd say just be a little careful. Now, I didn't spend time on this. I'm going to do it right now. The TLT broke the uptrend Chapman Wave inside track propellant zone. It's now repellent zone, the whole area of the 94s to 95, trading at 92.31, up 7 cents. This has all the pattern that I look at here is the upside down one. This is the one, if I can just find it right now, do it quickly. Yeah, this is the one. So I have a pattern that I discuss very often. Let me see if I can do this. I'll put it here. That's the Chapman Wave falling axe formation. That like over there, lower highs and much lower lows, turns around. I've been showing it all morning. But I then found, wait a minute, if the pattern works to the on the upside long leg up and then all those moves to the downside, surely it's exactly the same thing that you've got on the downside. I took the slide and all I did is I reversed. Look, the printing's upside down. It's the same thing. Well, lo and behold, tell me if this isn't the case right here. Look, higher lows and much higher highs. It goes to a peak D. If it did that only going to a C or something like that, it would be the dreaded H pattern. In this case, it says going to a peak D means that you should pull back sharply. You've already used up all the upside energy. In a way, you've also used downside because each one of the troughs after the big move up is a downside move. And that says that in this particular instance, you could be forming the dreaded H pattern. If you take that out, you could have a 1-to-1 to the downside. But it does say that, not always, but a lot of the time, the left side low, in this case, the left side low in the 87s, should be sacrosanct. It should not be taken out. Wow, that's a long way down. Let's see where the next level of support is. And that's the trough of the 26th of July in the TLT, the iShares Treasury Bond ETF, at 91.47. And today's low is 92.25. So I'm watching this very closely. So let me just do this real quickly. You've got the TNX, that is the 10-year yields, and a lot of rates are aligned to the 10-year ETF. In a leg E, up above the 200 period moving average at 41.92. That's 4.192%. It's only a leg A in the weekly chart. So that's it. A lot can happen. But in the meantime, you're making higher highs and definitely higher lows. And that just says yields are an issue. Is it starting to impact Toll Brothers? Toll Brothers? TOL is the symbol. I would say it's probably going to. And, yep, lo and behold, here's another one. I was looking at it yesterday. I said, everything about this move says that this peak C has a kind of characteristic with the move that was starting to move down yesterday at this time of a D. And lo and behold, we've taken out the left side low, which means that is at an all-time high. It's really unusual to do this. So what I was going to do, I never did. But what I should have said is, in the Chapman methodology, a Chapman instant restart that goes to a leg E and then a peak E above the D, and then comes back and takes out the trough of D, but then goes to higher highs, has the characteristic of what I call the Chapman unconventional flat-based restart. I actually think I did mention this. I can't remember exactly which stock it was yesterday. So basically, this becomes A, B, C, D, and that's an E. So this really, and I was going to do the work, I thought, I can't waste time doing it. I should have done it. That's Chapman flat-based restart, and it says it should come back and take out this low right here, which is at 146.50, and today's low is 146.50. We haven't taken it out yet. And the weekly chart is in leg D, and the monthly chart, I've got it as a leg F. Let's go to Lennar. Is that the one I drew? No, I didn't. Oh, this one was making lower lows and lower highs. I said that was a peak E, but my big question is, what is the weekly chart? And there I've got it as a C. You can't make that up. And I don't really, as yet, have a C1, C2. So I just have to say, we'll see what happens next. But I think that this whole area of the housing is going to be under duress at this particular time. And the weekly chart of the HGX, the Philadelphia Housing Sector Index, has gone to a leg C, probably a peak C. Here it has, I see it. This is the pattern. That spiky pattern, you remember Bart Simpson hairstyle, spiky pattern, and then it comes back down. I said, this is the one, I think that peak D. I'm not calling it a C, I'm calling it a D. And now we've got that pullback. So this is a time that I think you've got to be a little careful. And that's the reason why for subscribers to my opening call, we've had some really nice gains in certain sectors, certain stocks. Just take money off. We're trying to build up a kitty because we are anticipating some whippiness for some reason over the next 2 or 3 weeks, huh? Okay. With that said, just before we get to the break, I wanted to show you this chart right here. INDU. And I still don't know how it's going to pan out. But at this point, look at that. It says by the 11th, we should be topping out. That's a measured move. I'll be back in a moment. Basil Chapman, Tiger Indexes Hour. Dow is down 114, improving.
The consistency you're looking for is closer than you think. One or two adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the second and fourth Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry October 11th and 25th for more live trading action. Your purchase goes towards 2 sessions, so make sure to sign up now so you don't miss a chance to sit next to Larry as he trades the market live. For all information and reserve your spot today, go to the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com and hit Watch Tiger TV. That's TFNN.com. Then hit Watch Tiger TV.
Hi folks, the Dow slowly improves down just 108 and the S&P is down minus 17. So, excuse me, looking at the 5 and 10 minute charts, the real thing is 58 has to get to a leg D above the high that was made at 10:10 of 58.81. So 58.81, 25 would do it. But 58.85 is the 200 period exponential moving average in the 10-minute chart. If it's able to break above that and then start to close in the 590s, finally you'll see the right side strength that we're looking at as a possibility to try to work its way towards that left side high that we were looking at to try to get too close to a D. So now let me just do this real quickly. So we're looking at the measured move from March 2024 to the high that was made July 2024. And that measured move takes you to November the 11th, 11/11/24. That's after the election. So all I can say is, wow. Does that mean we don't get election results for a couple of days again? I don't know. All I can say is we are watching it very closely in terms of market conditions. And the market conditions right now are suggesting that the strength that we've seen lately is starting to become a little bit more selective in some ways and broadening out in other ways. So it's a very mixed picture, but a mixed picture is good, better than a very weak picture. So I'm looking at this and suggesting to you that we've got further upside to go, but I think it's going to be limited, and there's going to be a cap on the upside. But hopefully there's also a cap on the downside, at least support levels. So with that said, I'm going to say check out my opening call, daily newsletter. But most importantly, what we are looking at is in this particular environment, it is a mixed picture. And those bonds coming down like that are suggesting that yields have not yet made their way to the downside. In fact, they're doing the exact opposite. They're moving their way to the upside. And that's usually a problem in the market. We'll see what happens. We'll see if that's going to foretell anything. But in the meantime, we remain